How much life insurance should you have? Is term life insurance the best option? And what happens when the ATM eats the check you're trying to deposit? We'll answer these questions and more on this, the 33rd episode of the DoughRoller Podcast.
Welcome to the DoughRoller Podcast, where the best thing money can buy is financial freedom. We help you make more, spend less, and invest the rest. And now your host, Rob Berger.
Whether you're just starting out, buried under a mountain of debt, or well on your way to financial freedom, this is the podcast to help you take your finances to the next level. It is now day 26 in our 31-day money challenge. We're cruising right along and going to take a bit of a turn. We were talking about investing. Today, we're going to be talking about the incredibly important topic of life insurance. Perhaps not the most exciting subject in the world, although I guess it is for some. But rather than try to do this on my own, I thought I'd bring in an expert. And so I've asked Jeff Rose. He's a good friend of mine. Jeff is blogs at Good Financial Sense. He also happens to be a certified financial planner and sells term life insurance. And so I thought, well, who better than to come on the show and talk to us about things like, should you have life insurance? How much should you have? How much does it cost? What if you smoke? Do you really need to get a physical? How long should the term of your policy be? Is term life insurance really the best option? So we're going to tackle all those questions. I threw those questions at Jeff, and he did a great job of answering them. And I actually have a giveaway that Jeff proposed, and I'm excited about that. I'll actually tell you about that after his interview. So be sure to stay tuned, and I'll tell you about that. Also going to tell you, as you may have heard in the opening questions to this podcast, what happens when you deposit a check at an ATM and in the middle of that it eats your check and doesn't actually deposit it? Well, I'll give you the answer to that, at least based on my experience. Going to talk to you today about how to take some free finance courses online. And I got a question of the day I want to pose to you. I'm really interested in your opinion on something that's been in the news a lot. And so I've got a question of the day, something I haven't done before, but I really want your take on something, and I'll cover that as well. So before we get into it, let me first thank our sponsors. They've sponsored the entire 31-day money challenge. Really, their support has made this possible, and I'm very grateful to them. The first is Personal Capital. They offer a free online tool where you can aggregate all of your investment accounts, retirement and non-retirement, all into one place. Check your performance, check your asset allocation, check your fees. Very easy to use. I check it every day except when the market is really, really down, and then sometimes I skip a day. In the event, you can check it out, personalcapital.com. And Betterment's an online platform that invests your money in both stock and bond ETFs. You just pick the percentage you want in each. Betterment does the rest. They rebalance for you automatically. They reinvest your dividends automatically. I've had a Betterment account now, I think for 3 years. And it's interesting, as an aside, when they first came out, I actually gave them just a so-so review because I didn't like how much the fees they were charging. And I actually ended up meeting the CEO and talking to him, and we had a dialogue about that. But since then, they've brought the fees way, way down. So I have a Betterment account, and it's worked out very well for me. Anyway, you can check them out at betterment.com. Okay, so let's get to the ATM story. So I don't know if you've ever tried this. Back in the day, you had to stick your checks in an envelope, and then you'd to deposit them in an ATM. And I guess at some point, someone with the bank would open up each envelope and figure out the amount and record the deposit. But now you can actually just slide your checks into a slot there, and it sucks your checks into the ATM. And I don't know how it does this, but scans it somehow, optical character recognition, I guess, but it can actually figure out the amount of your check, and it gives you a list on the screen there, and if it's all correct, you can hit yes, deposit it. And I use this feature a lot. But you might wonder what would happen if it took your check and didn't actually deposit it, something went wrong. And you think, well, if that were going to happen, two things are certain. The first is you wouldn't be depositing a $10 check. No. That would make things too easy. No, you would probably be depositing a $500 check, a $750 check, a $1,000 check, or, I don't know, a check for $1,840, just to pick a number. And the second thing that you can just count on is that you would not be doing this during regular banking hours where you could simply go into the bank and ask for help. No. This would be after hours, and it would be dark as can be, and no one would be at that bank. Well, yes, that happened to me. I had my flexible spending account. I waited to the end of the year to submit all my receipts. So I had this big check, and I go to deposit it like I've done many times before, and I stick it in the little slot thingy, and it takes it into the ATM, and the screen just crashed. I'd never seen that before. This is one of those touch screens. This was at Citibank, and it's one of those touch screens, and it went blank, and then a little wrench and screwdriver icon came up that I guess was Citibank's way of telling me that things were under repair. And so I thought, well, I'll wait. And then it actually rebooted. I actually saw a Windows startup screen on the ATM. I kid you not. I guess I never really thought about the operating system of an ATM, but for some reason, if I had to guess, I wouldn't have picked Windows. I don't know. Something other than that. Anyway, there it was, the Windows startup screen. Well, it took about 5, 6, 7 minutes to reboot. And when it did, it came up to the main startup screen of the ATM like I hadn't even been there. I hadn't given it a check, nothing. So I called Citibank, and they were all helpful and whatnot. Of course, there was nothing they could do at that moment, but they said for me to follow up in the morning. So you're wondering what happened. Well, I called at 8 a.m. They said, yeah, there's no deposit there. We'll open up a case file and take care of it. And within 24 hours, I checked my account, and there was the deposit. So I guess someone at the bank, presumably they do this every day anyway, went in and found the check, and the money's in my bank account. So that's good. A little nerve-wracking. That's a lot of money to have, not knowing quite where in the world the check went to. I guess machines aren't perfect, right? But it ended well, and Citibank took care of me, for which I am grateful. So that was my experience trying to deposit a check at an ATM. Okay, I mentioned some free finance courses, and this is I've heard about this site. I've been to it a number of times. I've never actually taken a course, and I just jumped right in the deep end. I'm taking 3 all at one time. They don't start for a few days. The website is Coursera. I assume I'm pronouncing it right out. It's COURSERA.com. I will leave, and I'm making a note now, but I will leave a link in the show notes. But it offers free online courses, and the thing is, they're taught by university professors. And I wanted to take it. I actually first signed up for a course in electrical engineering. I don't know why. It was just something that interested me. And I was reading, the prerequisites. This was after I signed up, of course, and it said you don't need much math. All you need is, a good understanding of calculus. And I thought, this is not going to go well for me. Math is my favorite subject, but I was an English major in college, so I didn't have a lot of math. So I decided to drop that class. What I'm really interested in anyway is finance. So I signed up for Introduction to Finance, taught by a University of Michigan professor. I signed up for Financial Markets, taught by Bob Schiller of Yale University, whom you may have heard of. And then the one that's actually the most interesting to me, from the University of Washington, a professor is teaching an Introduction to Computational Finance and Financial Econometrics, which, I don't know, just the name of the class sounded really cool. So that's what I'm taking. The first one starts in 8 days. The others start next month. But whatever you're interested in, they have a ton of classes about everything, and they're free. So it might be something you want to check out. I'm a sort of a finance nerd, so that's what I'm going to stick with. But they have classes on everything. So it might be something you want to give a try. So I wanted to mention that to you. And then before we get to the interview with Jeff, I have a question of the day. In the press, this is not something too new, but I've seen it come up more and more, and that is this notion of one of our biggest hurdles or problems facing the United States is income inequality. The president has mentioned that. There was some reporter asking Hollywood, movie stars, what's the biggest challenge we face? And I guess income inequality is the new thing. It's the new world peace. There's always this, kind of thing that's just, I guess, conventional to say. So it's just, you sound smart, income inequality. And I'm curious what you think about that. I don't know. To me, talking about income inequality, it gets too fancy. Maybe it's because I'm from Ohio, and small town in Ohio, try to keep things simple. Isn't the issue poverty? I'm not sure why the issue is income inequality. I get the idea that as more and more of the wealth of a society is held by fewer and fewer people. That creates issues. I understand that. But I wonder here, if when you talk about income inequality, it gets people thinking about raising taxes on the wealthy, which I always found an odd way to address income inequality. We had a huge tax hike last year, and it doesn't help employment. It doesn't help people in poverty. I'm not sure exactly what issue it addresses. I suppose it brings down the debt a little bit, or not the debt, the deficit. But it seems to me that the issue is poverty, and really underlying that issue is jobs. It seems real simple to me. We need to put people back to work. I mean, when the unemployment rate goes down, and it did last month, it goes down because people have thrown up their hands and just given up looking for a job. It's not because we're creating enough employment. And so when we start to talk about income inequality, it seems to me we're kind of taking our eyes off the ball, and we're getting too fancy. The poverty level now over the last 3 years is the highest it's been since 1965. I read that earlier today. And, we've had persistent high unemployment, and, people are suffering because they won't work. That seems pretty simple to me. I mean, it's not always an easy answer to address, but I wonder if when we start talking about income inequality, if we're going down the wrong path. I'm curious what you think. Is income inequality the big problem of our time? Is that the issue? Or is it something else? Let me know what you think. Just shoot an email to dr@doughroller.net, and I'd love to hear what you think about that. Okay, so now let's talk about life insurance. As I mentioned, Jeff Rose is on the show, and he'll lay it out for us and tell us whether we need it, how much we need, how much it costs, all those sorts of things. So let's turn to the interview. Jeff, welcome to the show.
Yeah, thanks for having me.
Hey, man, I'm glad you could take some time to talk with us today. For those listening, Jeff and I have known each other. I don't know how long we've known each other, a number of years.
Too long?
I don't know. Has it been too long? Jeff's a fellow blogger at goodfinancialsense.com, among others. And I guess we see each other probably a couple times a year, certainly at the Bloggers Conference. And that actually brings me to the first question I have for you. We'll get into your background and all that stuff, but I got a much more important question. I had Jesse Meacham on the show, and I think he kicked your butt in the pull-up competition at FinCon this year. Is that true?
I mean, kicking butt. I mean, the guy did like 27 or 30 pull-ups. Like, that's a good amount. I got 19, which
that's impressive.
Still pretty good. And these are dead hang. There's no kip. But yeah, Jesse did kick
19 is he. I had mistakenly said during his interview that he did 29, and he corrected me. No, he did 31.
Oh, he did 31.
31.
Of course he did.
19, that's impressive. I wonder if maybe I could work out more this year. Maybe we could add our scores together or something next year. I don't know. And you were in the military, right?
I was, but I was in the Army, so we did push-ups. We didn't do pull-ups.
Okay.
Whatever. No excuses.
Should you have been a Marine? Would that have helped, or how does that work?
Marines are the ones that do pull-ups, correct? Yeah, I should have been a Marine.
Yeah, my trainer was a former Marine. He can do a lot of pull-ups. All right. Well, hey, why don't you kind of give us enough of that? Why don't you give us just a little bit of your background, how you got into the crazy world of personal finance blogging, and for our topic today, selling life insurance.
Yeah, so how I got into the personal finance blogging is really the extension of what I do day in and day out. I'm a financial planner. I've been doing it for 10 years. And in my process of being a financial advisor, I've always been excited to educate people. I quickly learned after becoming a financial advisor, for one, I didn't know anything about investing in personal finance, which is just, I think, the state of our country. I was a finance major in school, but yet I wasn't equipped with basic personal finance knowledge, or even to go out and start a Roth IRA, or even really knew what a mutual fund really was. And I literally stumbled to becoming a financial advisor, and I quickly realized that there were others out there that didn't know anything about investing in personal finance. So I became really passionate about I did seminars. I taught an investment class. I started the stock market game at our local high school. And these are ways, locally, I was just trying to educate people. This is before blogging really, I guess, even existed, or at least I knew it existed. And then in 2008, I literally stumbled upon what blogging was, and I finally understood the concept. And that's when I got really excited, because I realized, wow, I could actually reach potentially a lot of people. Took a while to reach a lot of people, But that's what I started. I just started writing articles and then started networking and meeting other personal finance bloggers like yourself. And, it's really just grown. And, that's where the book deal came out of, Soldier Finance came out of that. And as far as with life insurance, once I started becoming a financial advisor, the way I was brought up, I immediately got my insurance license. And, term insurance was probably the most common thing I've ever sold to anybody. And it just was like a natural fit. People would come to me and they want to do investing or start a college savings plan. And you'd have the conversation, oh, do you have any life insurance? And, oftentimes I would end up selling life insurance that way.
Okay. Well, let me ask you a few questions about what you just, your sort of your background. So you're a certified financial planner.
Yep.
Okay. So, for most of us, there's all these initials that go behind various folks' names, CFP, and there's 1,000 others. What is a CFP and how do you become one?
Yeah, the CFP, so like you are absolutely correct. In the financial services industry, I actually have 2 other designations that I don't use. I could be one of those guys that has 12 designations behind my name.
Right.
But to me, the CFP is like the designation to get. The CFP is a designation that to get it, it usually will take 3 years of doing study coursework. I actually did what was a fast track program. So I actually got mine in less than a year. And I did that I would go up to my home office in St. Louis, and 5 days a week I would be in a classroom from 8 a.m. to 5:30 p.m. being force-fed financial planning information. And it's just the entire financial planning process, which includes investing, retirement planning, life insurance, estate planning, anything that goes along with anything to do with your financial planning life. We covered it and in depth. And then we'd have to do like case studies. So if you have a 50-year-old couple and they have stock options and they have this much life insurance and they have this pension and they want to do this type of trust, blah, 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 what would you need to do? And it just helped us. The reason I did it was it's something in our industry you don't have to get it. The CFP is not something that's required. It's completely voluntary. I got it, I think I was 28 at the time, and the way I looked at it was a way for me to get real-world knowledge, a fast track to real-world knowledge that would maybe take me 10 years to get, but also, too, in our industry, it is one of the most coveted credentials to have. And to me, I was very committed and serious to the financial planning process, and that was my way of showing people, hey, I'm serious about it, and I'm going to get the designation, and I got it. And that's what it means to me and what it means to consumers.
Don't you have to also, as part of that, there's like some work experience that you have too? You have to work in a firm or whatever for some period of time?
Yeah, you have to have, I think it's a minimum of 3 years of work experience doing financial planning, working with clients directly. And there is like an exam I had to take. It was a 2-day, probably nothing like the bar exam, but to me it felt like the bar exam.
I'm sure it's tough.
I'll tell you, like when I walked out of there, I literally thought I failed. I was so distraught. I was like, oh my gosh, I just spent a year of my life, and like I totally bombed that exam. Turns out I passed, so I was thankful.
Good for well, my vivid memory. I've taken 2 bar exams, one in D.C. and one in Virginia. My very first one was in D.C. and they had. There's one day that's the multi-state where you have all these, basically, I think it's 200 multiple choice questions. But then the other day is all essay. And they give you, like in college, they give you the little blue book to write in. And each question had a limit to how many pages you could use to answer the question. I think it was 4 pages. And I remember, there was this question. It had 3 parts, A, B, and C. And so I knew it cold. And it's all timed, so I'm doing fine. I'm right where I should be. I fill up exactly 4 pages for parts A, B, and C. I'm feeling good. I turn the page and I see parts D and E. I about had a heart attack. Oh, I hate those things. Anyway, I passed. You passed. That's good. So you're a CFP. How does one become? Is there a license you have to get to sell life insurance?
To sell life insurance, basically, you just have to take the insurance exam for your state. So, for example, I reside in the state of Illinois. So, for me to sell life insurance in Illinois, I just had to take an exam that was relatively easy. Compared to the CFP, it's chump change.
Okay. And when you get that, can you sell any type of life insurance? Because there's term, there's whole life, universal, and there's very complicated.
Correct. You can sell anything that does not have an investment component to it. So term life, whole life. It also allows you to sell fixed annuities and also some fixed index annuities as well.
But so if it has an investing component, you have to get other designations or licenses?
So,
okay.
Like variable life insurance, like that wouldn't, you'd actually have to have a Series 7 license to sell that. You have to have a Series 7 and your life insurance license to sell that.
Okay. It's like a stockbroker or whatever.
Pretty much, yep.
Yeah. Okay. All right. So, well, let's. I want to talk about your book, but let's walk through life insurance first, and then we'll hit your book after that. And by the way, for those listening, Good Financial Sense, you just went through a complete redesign of your site, and I got to tell you, it looks fabulous. So for those listening, you need to check out goodfinancialsense.com. Not only does the site look good, you'll get to see what Jeff Rose looks like, and more importantly, what famous, would you call him an actor? I guess actor / strongman. I don't know what you call him. You'll see. You'll go to goodfinancialsense.com. You'll see what I'm talking about. Okay. Life insurance. So who needs it and how much do we need?
I think anybody that has a dependent, actually, as far as, we talk about who needs it, who doesn't need it. If you're single and have no dependents, you don't need life insurance. Unless that mom and dad are on the hook, because they've loaned you a lot of money, or maybe they co-sign for like a student loan or something like that. If you owe mom and dad some money, a good thing to do is take out a small term policy. For most people, for the most part, if you're in your 70s, even maybe late 60s, unless there's like a remarriage, or if you have some estate planning needs, or if you just want to, give away, if you have the financial capability to pay on an expensive premium at that age to leave some money for your kids or your grandkids, you don't need life insurance. Everybody in between, if you have a dependent, if you're married, if you have a spouse, you've got kids, if you're the sole breadwinner in your family, then you definitely need to have some type of life insurance.
And how do you go about, I've written about this myself, but there seem to be all these sort of rules of thumb and calculators and other things to figure out just how much life insurance someone should have. How do you, when folks come to you, what do you recommend? Is there any sort of rule of thumb, or how do you help people figure that out?
Yeah, the rule of thumb that I go by, and it's the one that I did for myself. I didn't, some people say, 10 times your salary, which I think, that's a good start. But, if you're, say, 25 and you're making $25,000 a year, 10 times your salary, $250,000. Well, if you get married, the next couple of years and you have a kid, then, that number is just doesn't work anymore, doesn't apply. And especially if you start getting raises, you start making more money. Typically, in that, a rule of thumb would be maybe 20 times your salary. The formula that I went by was, I try to figure out, how much income would my wife need a year to live off of if something happened to me? How much money would she need to, not have to go back to work, to take care of our 3 boys, to take care of our mortgage and, take care of college going forward. So I figured out how much she needed. And then I figured, okay, if she needs $100,000 a year, then how much, what sizable amount of money would she need to make 5% off of interest-wise to get her $100,000 a year? So I'm like, okay, if she could invest the money, make on average 5%, that's where we end up coming up with, $2 to $2.5 million of term life insurance. And that's one way of working back at it, because I looked at it more as an income replacement. How much money does she need? Some people look at it, well, how much debts do you have to pay off all your debt? I think that's one start. But then what I don't want is, I don't want the spouse to be in a financial bind, because, if my wife had to go back to work and work a full-time job plus overtime to take care of her kids, that's just putting her, she's already dealing with, I hope she's going to be emotionally distraught that I'm not there.
I'm sure she will, Jeff. I'm sure she will.
But I also don't want her to have to, I just want her to be able to spend the time with the kids, and, just not to worry about finances. Right. Just, I think she's going to be probably more clingy, to her kids, and, if something happened to me. So that's, that's the way I went about it.
Mm-hmm. So if you go that route, then in terms of the 5%, basically you'd take what you think your annual need is and multiply it by 20.
Yeah, pretty much.
that would get you there. I'll have to run through my figures. I think because we bought what we did. We bought life insurance when we had our children and bought a home. And my wife stayed at home with our children, and I worked, so I had more insurance. She had a little bit with the thought of help taking care of the kids or something if something were to happen to her. But I had more, a lot more because I was the one with the job. And then when we moved into a more expensive home, 10 years later, this was now about 10 years ago. I left her insurance the same, but I upped mine considerably. And I guess I don't think I thought about it the way you've just laid it out, but more or less that's what we ended up with. As I think back, I'm not really quite sure how I picked the number, but I think it kind of followed what you've just suggested, and I think that's pretty good advice. So what about the term of if we're going to get term insurance? How do you think about how long the insurance should last? And I guess as part of that, how does the term of the policy affect the cost?
Yeah, I mean, I think for me, I'm 30. God, how am I? I'm 35 now. I've always had a 30-year term. To me, if you're like 35, even in your 40s, I would probably argue to if you can afford it. Obviously, your budget's going to really determine. I don't want you to become insurance poor, but I think you have to look at getting the 30-year policy initially, just because you never know how long you're going to live. And I think some people don't realize this, but when you take out a 30-year term, it's not like a 30-year mortgage where you're going to have to pay on it for 30 years. It's a unilateral contract, so you can void the contract anytime you want just by not paying the premium.
Right.
And so I'll give you an example. I'm trying to see. So you asked approximate cost. Is that a question?
Yeah. Well, I assume the longer the term, the more it costs. Is that right?
True. Yeah. I thought I had some numbers here, and I pulled up the wrong chart. I'm trying to think. Approximately, you're probably looking at a 20 to 30% cost increase by going from, say, a 20 to 30 year, if I had to guess.
Right.
And just to give an example, like a $250,000 term policy for a 25-year-old, it's in good health, is about $215 a year. For a 35-year-old, you're looking at approximately $250 a year. So, I mean, for a lot of people that think that life insurance is super expensive, I mean, we're talking, nothing.
Right. Yeah, I mean, that's not too bad. I mean, of course, obviously it goes up if you need more coverage.
Correct, yeah.
But, I mean, that's the thing about term insurance is assuming – I mean, part of it, though, of course, is determined based on your health, right? I mean, so I know when I got my policy that someone came out to the house and took my blood pressure and my pulse and drew some blood, and I don't know what else they did with it. But someone's health is going to factor in, and, of course, weight, too. So I assume all that's going to factor into the cost as well.
It does, and that's one thing that a lot of people don't realize is it's, as you mentioned, your health, your height, your weight, any pre-existing conditions, your driving record could also affect your life insurance policy. I had a guy who applied that poor guy. I mean, he was in his late 50s or mid to late 50s, and I think he was remarried, was getting like a 15, 20-year policy. The guy had never had a speeding ticket in his life. And for some reason, in the past 6 months, he did some traveling, went to maybe go visit his daughter, and he had three speeding tickets in the last 6 months.
And that affected his life insurance premium?
It did, because if you get more than two speeding tickets within a year's time, basically it's considered reckless driving and you're at risk.
Wow.
Yeah. So I mean that's one thing. So if you've got a lead foot, that could affect your life insurance premium.
It's like there's nothing sacred anymore in our lives. There's nothing that we can't keep from these people. You know what I mean? I mean,
yeah.
It's like when your credit score affects your auto insurance premium. It's like, what? Those seem like two different things. But I guess if you're a crazy driver, I'm not saying this guy was, but if you are a reckless driver, obviously it increases the chance of death. So there you go, I guess, right?
Yeah, that's right.
What about folks that smoke? Well, I got two questions there. What constitutes smoking? I mean, like if you have the occasional cigar when you're playing golf, are you a smoker? And if you are a smoker, how will that impact the cost of your insurance?
Yeah, if you just smoke the regular, occasional cigar, you are typically okay. Technically, you should disclose that. I will tell you that I have the occasional cigar. It was a non-issue. I was when I got rated, I got Preferred Plus, which is the top rating you could get. My first experience, so it's somebody that is considered a smoker. Would be anybody that smokes a cigarette, that's smoking, probably more than one cigarette a day. You're a smoker. There are companies, though, that actually, and that's one thing that people need to know, there are certain companies that will treat smokers better. And that is why working with an independent agent that can use multiple carriers is very important. My first experience helping a client get life insurance, I didn't realize he wasn't a smoker, but he chewed tobacco. And that never came up. He never mentioned it. I never asked. And whenever his lab results came back, he had nicotine in his system. And just to give you an example, this was a 30-year-old male that needed life insurance. And if you're healthy, I think we talked about earlier, you're looking at roughly $250 for term. And as a smoker, the rate went up from $250 on up to $700.
Holy! And this for $250,000 in insurance?
Correct. Yeah.
Wow.
Same face amount. So basically, it was 2.6 times more expensive.
And he was chewing tobacco. That was his
chewing tobacco. Yeah.
Wow, that's a huge jump.
It is a huge jump.
Yeah, and not to mention to add the cost of the tobacco to begin with.
Yeah, no doubt. And you know what? But what you can do, like for people, for people that are really trying to quit, or like they are determined that they can quit, there are some companies that will actually rate you as a non-smoker. Initially, they're going to give you 1 year basically to quit, but then they're going to make you do blood, do a lab again in a year's time. And if you fail, then boom, you're going back up to smoker rates.
And you work with these companies. So in other words, if someone came to you that's a smoker, you have contacts with these sorts of companies that might be able to do that.
Yeah, we have a back office that we work with over 60 different carriers. So like we know like which companies are going to treat smokers favorable, and that changes. I'm trying to think of the company now. Like Lincoln Financial right now, for example, might treat smokers more favorable today, but their underwriting guidelines may change. They could have changed as of January 1. So and that happens all the time. And a lot of times people don't realize that. It's something honestly I didn't really realize until I got into the life insurance industry. And I found out, okay, now I kind of understand how the game works.
Right. Okay, good. Well, by the way, for those listening, you can find Jeff has a website dedicated just to life insurance. Easy site to remember, lifeinsurancebyjeff.com. And folks can go on there and either call you or they can. I see you have like a widget there in the sidebar where they can kind of compare quotes, right?
Yep, sure can. Yep.
Okay. How long does the process? If someone called you today, when could you put them into a life insurance policy? How long would that take?
Yeah, so there's two ways I can answer that question. So right now, there's also what we call no exam life insurance policies. So basically, if you are in decent health, if you have any major conditions, it's not going to apply to you. But there are some no exam policies where you could basically fill out an application online and within 3 days be approved.
Wow.
With that type of policy, you're going to pay a little bit more. You're paying more for the convenience. We usually don't start that route. People with that route, there's some issue, like there's some type of court mandate, like they're getting a divorce and the judge has ordered that they need life insurance, or maybe they need life insurance for like a business loan or something like that. We'll start that. That's typically the only way we'll go that. Or people just are deathly afraid of needles, or they're just lazy, don't want to get the exam, which is really nothing to do. The people show up at their house and do your blood and urine. But anyway, there are some like 3 days or some other no exam that we can have you insured in less than 2 weeks. If you're going to go the traditional policy, which we usually will start with because it is the least expensive, if you don't have any major health conditions, 6 to 8 weeks.
Okay.
If we have to go back and forth with getting doctor records, and just making sure that you let's say that you had a minor stroke or something like that, and we have to show some documentation. There's some going back and forth. I mean, it could take up to 2 to 3 months.
Okay. Yeah, I didn't realize you could do a no-exam policy. It's almost like a no-doc mortgage loan or something. But as you said, that will cost you more. So I guess it's better to go the exam route if you can.
Yeah, absolutely.
You mentioned independent agents. So I take it you're an independent agent.
Yep.
So kind of help us with what that means, and are there some agents that aren't independent agents?
Yeah, I think, the most common comparison you'll initially hear is captive versus independent. And when you think captive, think State Farm, think Country Financial, or, think, trying to think of some other big Northwestern Mutual will probably be another, captive. And what does that mean? So basically, if you go to a State Farm agent, most likely you're going to get State Farm life insurance, which might be okay. But the reality is that they typically can't quote you any other life insurance companies. They're going to quote you State Farm and State Farm only. If they can quote you, there are some independent agents that I've seen that will work for, say they work for MetLife or they work for Lincoln. They call themselves independent, but typically they're going to quote you MetLife insurance. And actually, I'm going to give you a perfect example. My wife, when her first job out of college, she was working for AIG, selling, mostly did like this, kind of like the Aflac of AIG, that type of insurance. But she could also sell life insurance. And she had a gentleman that was applying for life insurance. And obviously, she's quoting him AIG. And I was working at my brokerage firm, and she came in and she wanted to see, because I could also quote AIG insurance as well. And so I ran a quote for the guy, the same quote. And with me, it was like $200 a month cheaper, and we were both quoting AIG insurance.
Well, why would that be?
And the only thing I could figure out was because she got to pay more commission.
Ah, okay.
And this is several years ago. Obviously, it's probably like 9 years ago this happened, and things could have changed, but that was a pretty eye-opening experience. So she was technically independent, but they sold AIG. Why? Because they got paid more. And the same thing, I've seen that with some MetLife, and I don't want to single them out. I'm sure it's probably similar with other quote-unquote independent agents. But my true definition of independent agent, can they quote more than 30 different carriers? Do they have contracts with 30 different carriers? If that's the case, then I think you're going to be in good hands.
Okay. Well, I do want to turn to your book here, but before we do, let me ask you one more question about life insurance. And this is something that kind of crossed my mind because of my own situation. So I have a 20-year term policy, and I bought it 10 years ago. So I've got another 10 years. In fact, I paid the annual premium just a few days ago. Does it make sense for me to compare quotes now on a new policy? Even though I've got 10 years left on this, does it make sense to go out and see what a 10-year term would cost me today, or I don't know, maybe even a 20-year term if I wanted something longer?
Yeah, I think the one thing that I think is pretty interesting is that the cool thing with life insurance is like you can always shop. You could even start the process and just see like how much it would end up costing you. You don't have to give up your current policy. There's no monetary commitment or down payment to try for a new policy. The question I'd ask is like, do you feel that you'll need life insurance past the 10 years? If that's something that if you're leaning that way, it doesn't cost any money to find out. And I actually have seen cases where, because life insurance right now, prices have really dropped over the past couple of years, or at least the last 5 years. And I saw one case where a lady, I'm not sure why she did this, but she was doing 10-year policies at a time. And I think she took it out when she was 35. She was now 45, and she wanted to do another 10-year policy. And in her case, at 45 years old, it was actually cheaper than when she was 35.
Well, and that's what I was wondering. I got a really good. I think I was Preferred Plus as well. But I wonder if I could save anything. I'll have to look into that. I know maybe I'll just go to your site and punch in my numbers and see what comes up.
Yeah, and right now, obviously you're dealing with age and if any health situations have arisen since then. Those are some of the factors. But
I can't do 19 pull-ups. So if that is the standard, I'm in big trouble. I might be able to reel off 5, which actually I think ain't bad. I got to tell you.
Bad?
Yeah. It ain't 19 and it surely ain't 31 anyway. Okay, good. Well, that's helpful. I mean, like you said, it's so easy to compare prices. So it's the same thing with auto insurance. Why not compare it once a year? But
Right.
all right. Well, let's talk about your book. So, Soldier of Finance. So, what's up with the title there? What's all the military talk about?
Yeah, so I was in the Army National Guard for 9 years. I was deployed to Iraq for 16 months back in 2005. Doing military police maneuvers while we were overseas. So that's where the soldier part comes from. The finance, obviously, that's the financial planner blogging side. What the story behind the book is, a lot of people that know me, don't know that initially in my younger days, I was a college dropout, working in a dead end job, going nowhere. Joining the National Guard was really one of the things that just resurrected, my life and getting my butt in order. And what the book is really about is just for people that have maybe made either a financial mistake or a life mistake, and they want to take charge of their life again, or maybe those that have procrastinated and need to take action. This book basically is for those people. For people that just want something better, that want something different, and are willing to put a little work into it. And that's really kind of what the book's core message is about.
Okay. Well, I will be sure to link to the book in the show notes. I'm looking at it right now on Amazon. It's got excellent reviews. It's a 5-star, which is impressive. And it's not like a 5-star with 3 reviews. It's got a ton of reviews. Let me ask you this. You know Mike Piper from oblivioninvestor.com.
Yeah.
Or obliviousinvestor.com. I interviewed him about his success in publishing Amazon books. And I'm kind of just curious. So how long did it take you to write this book? And when you were writing it, what did a typical day look like for you? I mean, are you hunkered down in front of a computer 8 hours a day writing this thing? How did you get this thing written?
Yeah, no, not even close. It actually took me, I want to say, about 3.5 years to write it. And the reason just, I'm not a natural writer, so I can only put so much effort, on a daily, yet alone like a weekly basis. And I would start and I would write some, I get really excited, then I have to take a break. And then I want to say I got to a point where I got like 6 chapters done, and I realized that I didn't know where the book was going. I never actually had an outline at that, and that's when I realized, okay, Jeff, you need an outline. Writing a book for the first time, man, it was definitely there was a lot of lessons to be learned, but that's why I think it took me so long. I ended up having an editor-writer, kind of help me with the framework and just kind of get my thoughts in order, and that helped out a lot. For I think it was almost 50,000 words. So, writing a blog post, that's pretty well easy. I mean, I think you and we could write a series post, like on whatever topic. But when you're trying to connect, chapter 3 with chapter 9, there's a lot of strategy in that, and I guess that's a lot of stuff I didn't realize.
Yeah, it's obviously a lot different.
It is so much different, and that's why it took me so long. I think if I'm planning on doing another book, I'm just taking a bit of a hiatus, but I think I could hopefully do it half the time if I had to do it all over again.
Okay, well, I ask you that out of somewhat of a selfish interest. I've wanted to publish a book like forever, and I don't seem to have the commitment to see it through, which really just drives me crazy. And I'm finally now sitting down. I've been back and forth on topics. I've started some books, quit, and started others. And I think the problem is I was trying to take the easy way out. And the reality is writing a book is just hard work. It's not necessarily rocket science, unless you're writing about rocket science. But, it's just that commitment to do it and consistently struggle with getting your thoughts down. So, I think anyone who writes a good book like what you've done is deserves a lot of credit just for seeing it through. I don't
know.
Go ahead.
I don't know if you have like a place that you do when you write your blog post, but like I had to go to an entirely different place to do the writing. Just to remove myself and from anything that I would get stuck in like my typical routine of whatever that may be, email, Facebook, whatever. I just had to put myself where I knew I was going to focus on that. And if I started, and some days I might be like a few hours, like drink my coffee and maybe 3 hours is all I had, then that's all I do. And I'd go do something else after that.
Yeah, I have a really close friend. We practice law together. He's now at the Justice Department. And about a year and a half ago, we have lunch usually every week. About a year and a half ago, I looked at him and we were at lunch. I said, you know what? We've both talked about writing. A week from now, we're both going to write 1,000 words and bring it to lunch and exchange it. That's going to be our commitment, to kind of get started. A week later, he brought in his 1,000 words. Of course, I did not bring mine in. And he hasn't published yet, but he's actually on his third novel. And
Wow.
I've read the first one and half of the second one, and they're phenomenal. He's writing fiction, but he did it a couple thousand words a week. I mean, just day by day. He, by the way, recommended a book that I haven't read yet, but I'm looking at it now on Amazon. I'm going to read it. It's called Several Short Sentences About Writing by Verlin Klinkenborg. Anyway, he swears by it. So, well, that's fantastic. I can't wait to hear about your second one. I assume you're not quite ready to talk about number 2.
No, it's way too premature.
Yep. Well, listen, Jeff, I appreciate your time and your help on life insurance, because that can be a tricky issue for a lot of people. And I appreciate you coming on the show and steering us in the right direction.
Yeah, anytime.
All right, man. Thank you.
Thank you.
Well, there you go. I hope you enjoyed the interview. Hope you got your questions answered about life insurance. If you have any other questions, there's no way we can cover absolutely every angle to life insurance. But if you have more questions, feel free to shoot me an email at dr@doughroller.net. I'll do my best to answer your questions. I can always forward them to Jeff if for those tough ones that I can't quite figure out. And I know he'll be more than happy to help us. I'll also include in the show notes links to his site. So, obviously feel free to reach out to him directly. And then, as I alluded to in the podcast before the interview, there's going to be a giveaway. So Jeff has been gracious enough to give away 10 copies of his book, Soldier of Finance. So wanted to keep this simple. If you'd like a copy of the book, just shoot me an email, dr@doughroller.net, and I will, or Jeff will give away a copy to the first 10 people that email me. So if you're one of the first 10, I'll connect you with Jeff, and he will send out a free copy of his book. So a big thank you to him for doing that. And that brings the podcast to a close. There we go. As always, you can get the show notes to this podcast. Just go to doughroller.net/podcast 33. I'll have links to the resources, Jeff's site, his book, everything. As you know, you can reach me at dr@doughroller.net. Love to receive email, read them all, respond to them all. You can leave a voicemail. Just go to speakpipe.com/DoughRoller. Can leave a voicemail for me right from your computer. If you haven't already, you can subscribe to this podcast. Just go to doughroller.net/iTunes. That will redirect you to the iTunes page where this podcast resides. Love to get reviews, by the way. Love the good reviews, but also appreciate the ones with constructive criticism. Helps me make the show a little better. And lastly, if you haven't already, please sign up for our weekly newsletter. It's free, goes out every Saturday, packed full of tips and resources to help you make the most of your money. You can do that at doughroller.net/newsletter. So until next time, remember, the best thing money can buy is financial freedom.